Investing. When most people think of it, they imagine day trading, stock market, and people screaming at each other. From what you might have heard, investing doesn't need to be complicated, overwhelming, or even boring. The basics are quite simple, and once you get them down, once you understand how it works, you could make millions of dollars in your lifetime. Hello everyone, this is Anand Srikumar. Welcome to my YouTube channel where we're going to see everything related to investing in Canada. So, the main reason why we want to invest is that we want our money to work for ourselves. So if you're actually saving your money in a typical bank in Canada, if you're opening a savings account, the average interest that you're going to get for your savings account is somewhere between 0.5 to 1%. So it's smarter to put your money where the interest is better. I personally have investment accounts opened from investment companies, which gives me much higher interest rate comparing to a bank. So it's wiser to look into that before investing. There are a few different types of investment accounts available here in Canada, ranging from TFSA, that is tax-free savings account, RRSP, registered retirement saving plan, and there are non-registered investment accounts as well. The very first investment account that we are going to see is RRSP, that is registered retirement saving plan. RRSP is a retirement account created by Government of Canada to motivate Canadians to save for their retirement. So basically, it's a tax sheltered account. So what does a tax sheltered means? It means that the government cannot charge you any taxes on the money that you're investing. So RRSP is a tax deductible account as well, meaning when you invest money into an RRSP account, you get a tax deduction on your contribution. And every time you put money in your RRSP, you get a tax refund when you file for your tax. The best way to use RRSP is to put money into it when you are in a higher tax bracket while you have your employment income, and you can pull up the money out during retirement at a lower tax bracket. So not only you get a tax break on the higher tax rate, but your money also grows tax deferred until retirement when you pull it out. If you have lived in Canada and if you have an employment income or any other type of income, so let's say your income is $50,000 for that year, and during that year you contributed $9,000 to your RRSP. That means when it comes time to filing your tax for that year, CRA is gonna look at your income as if you have only made $41,000 and not $50,000, and that's because you contributed $9,000 to your RRSP. For 50,000 minus 9,000, that is 41,000. So the benefit is someone who made 41,000 income, they're going to pay less tax comparing to someone who made $50,000 per year income. So that's the difference here. That means you're allowed to not pay tax on that $9,000 income since you contributed that to your RRSP. So that's the main advantage of RRSP. Now, something to keep in mind is that only is the benefit that you're getting right now. It's still not touching on the deferred part. So what we mean by tax deferred is that even though you're not paying tax on that $9,000 now, you're gonna have to pay tax on that $9,000 into the future. The future time is when that you withdraw your money for your retirement from your RRSP. And let me explain why that's still better to pay taxes in the future as opposed to today. It's because the income that you're going to get during your retirement is likely lower than the income that you're getting today. So let's use another example to explain this. And let's say you make $100,000 per year, a nice little salary increase from the previous $50,000. So now you're going to hit a different tax bracket, a much higher tax bracket comparing to $50,000. So when we end up adding more money into the RRSP account, you're bringing down the taxable income like we discussed before. So you're able to skip all your high tax bracket today, and in the future sense when you're retiring, since your income will be lower, you can withdraw it at a low tax bracket. And there is one more benefit of having an RRSP account, that is, let's say if you're buying a house in Canada, you can take up to $35,000 from your RRSP account. The only catch is that you have to pay that money that you take from your RRSP for buying your first home within 15 years. So you got to pay back the money inside your RRSP within that 15 years. That's the only catch. So here you might have a question. Is there any contribution limit to this account, or can I put how much ever money I want? So basically there is a contribution limit. As of 2023, the maximum contribution that you can put on this account is up to $30,780. And basically you can put 18% of your earned income into this account. So let's say if you're earning $1 million, the maximum that you can put into this account is $30,780. as of 2023. So I would highly recommend you to just check out this account, because this is one of the account which you can utilize in order to buy your first home here in Canada, and also get the benefit from tax deduction, and also get the money out tax free in order to buy a home. For more information on how you can open this account, just leave me a comment down below or contact me through Facebook or LinkedIn, and I can certainly help you out. The link is in the description. Okay, so the second investment account in Canada is tax-free saving account, that is TFSA. So you might heard of this account, but I would call this as a tax-free investment account instead of tax-free saving account. So it's actually an account where there's no tax deduction when you put money in this. It's after tax money you put in here, and everything from this account that you put in, it grows tax-free. And when you take it out, you don't have to pay any tax even on the growth. Let's say if you're investing on a mutual fund or on an index fund or any kind of ETF. So basically, if there's a growth inside this account, inside this TFSA, you don't have to pay tax. So that's the wonderful benefit that you get from this account. So TFSA is a very powerful investment account which is great for wealth accumulation, and there is a contribution limit for this account as well. So basically, if you check your CRA, if you check your notice of assessment, you will be able to see your contribution room. So anything that you put inside this account within inside contribution room, that's good. But let's say if you're exceeding your contribution room, you have to pay penalty tax, that is 1%. So basically, let's say your contribution room is $10,000, and even if you're putting $10,100, you got to pay that penalty tax for that $100, which is like 1%, but still you got to pay it. So this is how TFSA works. And if you have any questions on how to set up a TFSA account, leave me a comment down below as well. I can certainly help you out. So these are the investment account here in Canada that is most commonly used, but there are other accounts such as like non-registered investment accounts, which we will discuss in detail in the future video. And there is accounts such as RESP, that is Registered Education Saving Plan. And there is RDSP, which is Registered Disability Saving Plan. And there are accounts as well, so we will look into that in the future videos. So depending upon your priorities and objective, you can use these accounts and build wealth inside these accounts. So each account has a different tax objective, so make sure you know that. Make sure you contact a financial advisor before making any of the decision, because this is an informative video on how you can use all these investment accounts, but certainly check with your financial advisor before you proceed with it. So the next main question most of the people have is, when do I start investing? So this is the question that most of the people have, like, am I too young to invest? Am I too old to invest? The short answer is, you should start investing as soon as you can. The early you start investing, the better you can get the advantage of compound interest. Before investing, you should consider these two things. Point one, you should pay off all your high interest debt. Let's say if you have a credit card debt, or let's say if you have a loan which is having a higher interest, you got to make sure that you pay it off before investing. And step two, you should make sure that you build an emergency fund just in case of an emergency. Emergency can pop up at any point of time. So in case if something like that happens, you should make sure that you take money from emergency account, not from your investment or not from your savings. So next important thing that most people ask is, how much should I invest? So this is actually this might be quite trickier. It honestly depends on their income. So let's say if you can save at least 20% of your earned income, that should be good. So you can start with just by saving like $500 or even $200, $300, something like that. Just keep it aside, and once you build up a habit of saving, that's gonna help you a lot moving forward. So for people who are not able to save any money, the easiest way that you can find right now, if you are living beyond your means, is by doing this one little tactic. So if you can't save, if you can't invest 20% of your money right now, if I say to you the only way you can be wealthy or have financial independence to save 20% of your money, you say, oh my gosh, I'm not able to save it, I'm not able to set aside the saving money, that means you're overspending. And by the way, there are two types of people in life. So there are savers and there are spenders. So you got to make sure that you're saving and building that discipline over time, so that it's going to help you moving forward. If you're living alone, you're either a saver or a spender. So you want to build a habit of being a saver and an investor. So you got to understand that. I think money is an amazing source of joy. And when we typically think about investing or saving, it kind of feels like flossing to us. So some people think that should I even invest in these accounts? Should I even put money on this TFSA or RRSP? I usually ask them, okay, what do you want to do with this money? What is your rich life? So people say that I want to buy a house within so and so years. I want to go for a family trip. I want to go for a vacation. So, okay, in order to do these things, we need a saving, right? So let's start there. Let's see, in order to go for this family trip, in order to buy a house, you need so and so money. So suddenly, once you see that, once you realize how much money that you want to save in order to buy a house or go for a family trip, that time it clicks. So basically they feel that, okay, this job that I'm doing is not gonna fulfill my dreams of buying a house or even going for a vacation. So what people typically do is they negotiate their salary, or they do another part-time job, or they even start a business like myself. So I'm an independent financial advisor. We teach individuals and families how to get into better financial shape, how to plan for a retirement, how to get rid of debt, and mainly educating everyone about Canadian finances. But for some, we actually teach them how to get into business with us by starting earning additional income on a part time or even a full time basis, and eventually become a business owner within our company. If you want more information on how you can join my wonderful team and build your business and financial field, reach out to me on Facebook or LinkedIn. The link is in the description below. I'll finish off by saying that every month, every year that you wait to invest, it's costing you thousands, even tens and thousands of dollars. So keep that in mind. And if you're someone who doesn't have any money to invest or even have any saving, or even if you are in a huge debt, the best investment that you can do is investing on yourself. If you ask any financially successful people, they're going to tell you the greatest investment that they did is investing on themselves. So invest in yourself, learn a new skill, improve your communication, invest in improving your productivity. Once you get good at that, money will flow in. So be productive, keep that in mind. If you like this video, go ahead and give a like and subscribe to my channel. I'm going to see you in the next video. There's a lot of financial videos that I'm actually making, so please stay tuned and see you in the next one. I'm out.